let's go to the first slide, which is your rate grid.
Yes.
I'd like for you to, kind of take a second and talk about the rate grid, but something I noticed that seemed to jump off the page at me today when I saw it was down near the bottom. But talk us through of what's going on with the rates in the last, and we'll see that in the next slide significantly. It'll be pretty obvious, but talk to us about that.
What's interesting about this rate grid is how it has changed from a week ago. As we all know, because it was probably more anticipated than I've ever seen in my career, the Fed meetings from last week, and the anticipation that the Fed was going to, quote unquote, lower rates. And in fact, what the Fed did last week was the first time they've done this in 4 years, if you can believe it. They didn't lower rates, at least not all rates, but they lowered the Fed funds rate. And it was so widely anticipated, I think, for a couple of reasons. Predominantly because a lot of folks on the real estate side, prospective home buyers, even prospective not prospective homeowners who are looking to refi, were anticipating this action by the Fed because they thought it was going to directly impact and improve long-term mortgages. That mortgage rates were going to go down after the announcement. And of course, the announcement was that they were going to lower the Fed funds rate. It was expected 0.25%. They lowered it by 0.5%. And so, of course, that was considered great news. But here's what happened. And you can see this on our rate grid. A week ago, in fact, up until Tuesday of last week, the day before the meetings, a conforming 30-year fix, we could offer 5.5%. If you look at our rate grid now, it's 5.75%. So conforming 30-year loans actually have gone up 0.25% since the Fed announcement, not down. And I've got some customers who intentionally did what we call float the rate after we registered their file for loan processing, because they were convinced that after the Fed announcement that they're going to see lower mortgage rates to lock into, and it hasn't happened. Now, conversely, where the benefit has occurred is on the equity lending side. Equity loans, in particular HELOCs, home equity lines of credit, those are generally tied to the prime rate, and the commercial bank prime rate directly correlates to the Fed funds rate. So those who either have a HELOC or are looking to apply for one are now enjoying 0.5% lower rates on HELOCs since the Fed announcement. So there's that divergence in the loan product and rate benefit from the Fed action. Long-term mortgages, we've gotten worse. HELOCs, it's gotten better. And so, people are getting accustomed to that, some in a rather grumpy fashion, and others are, of course, celebrating.